Let's find out more about it and where are you finding risk, where are you finding opportunities. Let's go to David Kudla. He's founder and CEO of Chief Investment Strategist at Mainstay Capital Management. David, thank you for joining us this morning. I'm sure you're watching big tech names. I want to start there because we've heard from Alphabet, Tesla. I mean, quite a different picture from both of them, but the AI stories, are they similar? What's your reaction to those earnings reports?
Well, yeah, I mean, we have seen some mixed results in those earnings reports, but really when we look at the AI story, that's really what's going to propel growth stocks. We think for several years now, we're looking at a $3 trillion spend for AI, and mostly for the AI data centers and to power them, electrical grid to power them, $3 trillion spend through 2028. And it's not hope, it's not hype. It is a true story, and we're going to continue to see. They are early and known beneficiaries. We're going to have more companies to come, but there is, as opposed to the .com era, we have established companies that are really going to be investing hard into AI. AI is quite frankly, it's going to transform our society over the next decade.
Yeah, that's kind of what they're telling us, and it better, given some of the money they're spending here. Hey, David, you've been around this investment game a long time. You've seen it all. You've got a lot of experience. I have to ask you, what's your view on the valuation of this market? Does a number of like 22 times, is that something that causes you angst here, or do you just mean you have to do some extra work?
Yeah, if you looked at the .com where we were for valuations then, GFC where we were for valuations then, when we're up around 22.5 times, we're at a richly valued area for stocks. But what we know is you can't really use valuation as to make market calls, because stocks will stay overvalued or undervalued for months or years. And this stock market just has a lot going for it right now. We just got a bill passed that will create some fiscal stimulus. We're looking for this monetary policy pivot later this year. President Trump and some others are trying to make that happen a lot faster than maybe Jerome Powell and the FOMC want to. But that's still the expectation. Buybacks at record highs. So you have that financial engineering going on. And, so we look across the map at all the fundamentals and tariffs. That was our real concern in the first quarter and certainly at the beginning of the second quarter. And, most of that is about the markets hating uncertainty. We're seeing more certainty. We're seeing that, the floor looks like it's 15 rather than 10, but that's what we're seeing as the deal for Japan, probably for the EU. There's a lot of our trading right there. And so there's probably more good news on the horizon than bad news at this point compared to where we were 3 months ago on tariffs. So, we look across the board at the fundamentals. Are we richly valued? Yes. But we're still constructive on stocks.
Where are you seeing risk, David? Is it cash heavy portfolios?
Yeah, I think that, that investors became here a couple of years ago. You could get 5% in a money market account, right? Or with short-term treasuries. And we like short-term treasuries in our tactical asset allocation approach because we're getting a high yield still without the duration risk. And so from a tactical standpoint, we're there. We also have other alternatives to diversify a portfolio like gold, silver, alternatives. So when we look at cash, where the yields come down some, straight cash, or I think where the real danger is, Lisa, is in bonds. And Japan is kind of the canary in the coal mine. They had an auction earlier this week on their 40-year JGB, their Japanese government bond. It hit an all-time high yield of 3.375%. And so we're seeing, I don't want to call it a meltdown, but we're seeing some problems, certainly some cracking in Japan's market. And what have we seen here? We've seen our bond yields are coming back towards their trading high, the highs they were at in April. And what's this a function of? Governments aren't solving the deficit problems, the debt problems. If anything, OBBBA makes it worse. And look, deficits matter. We know that.
Yeah, we'll see. A lot of folks to say, hey, as long as people come up to our Fed window, maybe they don't mean that much. I don't know about that one. David Kudla, founder, chief executive officer, and chief investment strategist, Mainstay Capital Management. Thank you so much for joining us.